kind of just said, look, tell us about your experiences in 08. And when Mark started telling this story about what had happened to him and his funds during that period, he had tears in his eyes. I had a lump in my throat, and I could see friends behind the camera also getting a bit choked up. And it was so powerful.
In terms of the speed, all I do know is I've looked back at every single dollar bull market, so it's been in an up phase, and you go into recession or some economic slowdown, what you find is the dollar accelerates.
And I tweeted, I just wrote, I like Joe Powell. There, I said it. I like the cut of his jib. There's nothing more. It's not a comment on his capacity for the job. There's something about him that I think he's the right guy at the right time. And I was astonished at the reaction to those 4 words.
Grant, it's rare to get us in a room together, let alone in the same country or continent together.
Right. These days, it is a rare occurrence.
So, I think people will be really interested in getting some of the perspectives of some of the things you've done this year, because you've been doing all sorts of amazing stuff, meeting some amazing people. You've done some kind of epic presentations that people really loved as well. So I'd love to just start with that, and we'll just get into, just shoot the breeze and see what's on both of our minds and where we're going and what's interesting us and stuff like that.
Look, these conversations are always so much fun. We haven't had a chance to have one for such a long time. So the fact that everyone else gets to listen in on them will be actually really good.
I think it might have been this time last year.
I think you're right. I think it probably was. Well, you kick off. You start, and then I'll take you in a completely different direction. How's that?
Yeah. So I think everybody's been fascinated with the In Conversations With interview. I mean, it started off with, I think one of the best pieces of kind of immersive journalism of any form was the Mark Cahodas.
Yeah, that was something.
It must have scared the shit out of you thinking, how am I going to do that again?
No, do you know what? It did, but it's funny because it's one of those things that I didn't know Mark. I'd seen Mark present at Jim Grant's conference, and you're like Joe Duran. There's sometimes you just get, there's one little piece of someone that you just kind of go, wow, that's interesting. And Mark was such a real guy, right? He's honest, he's open, he's balls to the wall. He doesn't care what anybody thinks, but there's a truth to him that is just amazing. And that's what we wanted to do, right? It was, let's get to the truth about this stuff. Who better to do it with than Cahodas? So, we went out there to his farm, and he and his wife Aurora and his son Max just couldn't have been nicer to us. They said, right, place is yours, we'll take all day. And he's just one of those guys you sit down and you connect with. And that conversation, I'm getting goosebumps thinking about it just now. There was one point in that where we were in his stables and we were talking about the 08 crisis, which for a short seller should have been, the happiest days of his career. And I kind of knew the story. I knew roughly what had happened, but not the detail. And I just kind of wanted to mention it because I knew people at home would be watching and going, well, 08, surely that must have been a good time for you. So I kind of just said, look, tell us about your experiences in 08. And when Mark started telling this story about what had happened to him and his funds during that period, he had tears in his eyes. I had a lump in my throat, and I could see friends behind the camera also getting a bit choked up. And it was so powerful, but real. It was real. It was an honest reaction to an honest question. And we kind of had to cut afterwards, and we're both being very sort of planes, trains, and automobiles. How about them cowboys about it all? But it was so powerful. And you're right, when we finished that, Franz and I, when we finished editing it and putting it all together, we both looked at each other and said, holy shit. Yeah, this is a high bar. But the guests have been just fantastic.
What was also great about the Mark Cahodas interview is that teed off a story that we've been able to follow on Twitter. And I know Mark's going to come back. Talk a bit about the MiMedx story and that whole perspective, because I don't know whether people have followed it, but that teed it up. He kind of introduced that thing, and then that whole thing's been playing out.
Well, it's a phenomenal story. And Mark, Mark's done this for his entire career, and he said to me at the time, he said, "This is the biggest fraud I've ever seen, hands down, bar none." And subsequent to our visit, literally a week later, he had 2 FBI agents show up at his door.
I know.
Basically threatening them.
Prompted by MiMedx, right?
Prompted by the CEO of MiMedx calling the senator for Georgia, who's calling the FBI. I mean, this is what Mark feels he has pretty strong proof of, and we will film the story. We're literally working the dates out now. We'll film it sometime in January.
Because he's saying there's a whole lot of stuff we don't know that went on that he can't reveal yet.
Well, I've been privy to it. We've become very good friends after this, and he's shown me some of this stuff. It's extraordinary, and this story is going to bring down an awful lot of influential people, and it just, when they talk about the end of cycles and when all the corruption and stuff comes out, this is going to be such an incredible lightning rod for people to get a look at what happens in the good times and how it unravels in the bad times. And look, this has taken a toll on Mark and his family. I saw them a couple of months ago, and it's been a really tough year for them as a family, as people. And Mark did a Periscope recently saying, "I'm done with short selling. I'm not going to do this anymore." Because because it's just, I don't know. We'll see. He might be back because it's so deep within him, this hatred of fraud. But it's been a brutal year.
Because it's like being an investigative journalist with your money on the line.
Yeah, exactly right.
And that's really hard to deal with, particularly when what you're doing is fighting people. Well, it's not like short selling as, I think this stock's going down.
Correct.
It is having to build an intense case and then going to battle to try and bring it out. I mean, that takes a different kind of gumption.
It does, and you're always aligned against not only powerful interests, but also nobody in the market wants to hear fraud. To that point you and I spoke so many times about when it turns, and this stuff all comes out. So if you start to see frauds appearing, people know we're turning. We're getting to that point where people suddenly care again. When the good times are rolling, no one cares if it's fraud. It's just going up. Let's buy it. So to take a stand and the abuse Mark has had on Twitter and places like that, and he sticks his chest out and says, "Look, I'm here to be shot at. Say what you want. The truth will out." But no one should have to go through that. And there are other things that hopefully we'll get into today where this is happening.
But thank God for people like Mark as well, right? So, I mean, that's been one of your themes. I think if there's a theme that I look at amongst in conversations with, you have a love of the short seller and you have a love of the value guy.
I do. And I wear that on my sleeve.
So talk me through why? Where does that come from? And talk us through some of the guests that you've had that kind of inspired you in that journey of discovery of those two things.
The value thing has always resonated with me. And there's a truth and an integrity and an honesty to that I think is important. And again, this is why you and I connected over Real Vision, because it's something that's important to us. This idea of truth and fairness and equity in that sense of the word is important to us. And so, when I talk to these guys, the value guys, it's something that you can see and you can quantify and you can make a judgment on what is value. Value is subjective, but if someone tells you this is how I measure value, it takes away a lot of the opacity, a lot of the unknowns, and you can say, okay, fine. If he's valuing it on that basis, do I agree with him? Do I not agree with him? Do I think that is the correct way to value it? It's a yardstick. The short selling side of things, I find fascinating because it's the hardest thing to do. I've done it throughout my career, sometimes successfully, sometimes terribly, poorly. But oftentimes it's just timing. You can get the story right. Like MiMedx went up after Mark brought this stuff out before it crashed to earth. And when I talk to these guys, I want to understand, like, how do you get this right? How do you do it effectively? How do you not get carried away with the emotions of it? Because it is an emotional thing, because you are saying, okay, you're all wrong and I'm right. And this is why. And if it's just a case of overvaluation, that's a really dangerous hill to want to die on, because valuations can get nuts. If it's a fraud, and our mutual friend Roddy Boyd has been through this, and I know you've spoken to him a bunch, I've spoken to him a bunch. You're basically out there saying, look, everybody, and waving flags that no one wants to listen to. So I'm fascinated in how you deal with that mentally, being set against everybody else. The fact that in the eyes of most of the market participants, if you're a short seller, you're evil. You're un-American. You're someone who's betting against success. And it's nothing to do with it. In my experience of short sellers, it's nothing to do with that. Yes, there are guys that manipulate markets and put out false... We all get that. But the short sellers that we feature, like Mark particularly, they are building incredibly strong, detailed cases as to why I think this is a fraud or why I think there's something funny going on here. And hopefully you and I'll get into Tesla, because this is another one that I think is worthy
I'm just teeing you up for that.
Yeah, it's worthy of talking about.
I'm walking you down that path. It's my interviewing
expertly,
skills.
if I may say. Well, but social media is something that you and I have both written about and spoken about and taken stands on, not just this year, but last. And it's such an incredibly powerful tool, but it's become, particularly in the case of short selling, something that I think is actually really dangerous. And if and when we get into Tesla, we'll talk about that. Because there's stuff going on which is unnecessary, it's uncalled for, it's shameful, frankly. But it demonstrates the problem with being a short seller in a world where everybody has a cause, everybody's an evangelist, everybody picks their stock and then refuses to listen to
But isn't that a function of late cycle bull markets anyway, right?
Absolutely.
We saw the same in Bitcoin. You know, there's things you can't touch on social media because they're just too hot.
Yeah. But it's a shame because we've seen the creation of these incredible tools for sharing information and for encouraging debate and for finding the other side of your argument and stress testing it. I mean, what could be better as an investor? To have this massive pool of intellectual capital that you have access to.
It's incredible.
And you use it as well as anybody. But just float trial balloons, hey, this is what I think, am I wrong? And I mean, it deeply saddens me how quickly these things turn into, you're an idiot, or you don't know what you're talking about, or your last call was awful.
The other way I look at that is information in itself.
I agree, yes.
Right, there's something you learn very quickly. I remember when I had that call on oil and it collapsed from 120 down to $30. The vitriol, which made me realize I was probably right.
Yep.
I mean, I could be the idiot in the room, and I often am, but sometimes it just gives informational value. So you'd kind of look at the short sellers in two different camps.
Yes, definitely.
Between the justice warriors and those that are just looking at valuation metrics from a different perspective.
Exactly right.
And the upside down valuation metric.
It's been a tough environment for both, but for completely different reasons. I think
because it's been an awful environment to be both of those things, the value investor or the short seller, because you're basically trying to do two ends of the valuation spectrum.
Exactly right.
And they've both been terrible to do.
Exactly right. And that's why these conversations have been so interesting to me. Talking to guys like Bill Strong, who you touched on the Aussie housing market, and we'll definitely get into that. But here's a value guy who's a career long guy. He's a value guy. But he sees this short opportunity setting up, which is just, he thinks, egregiously overvalued. It's a clear short. It's a value short. And to find those, which you do find at these points in the cycle, it's always kind of, this is interesting. This is really interesting because we're exhausted. There's a lot of downside here. Can I find a catalyst? Can I find a way to set this up in such a way that I can control the bleed? It's really interesting. And you see it gets these guys' juices.
But the other difficult thing is almost all of those guys are early. So like
Always.
David Einhorn's been short a whole bunch of these kind of racy tech names and has taken an enormous amount of pain for it because he's early. Because it's exactly, it's just the valuation spectrum is once you've got to that crazy level, whether it's on the downside or the upside, you generally have to take more pain than you ever think.
Yeah, and he has. But this is, going back to that social media thing, he's taken a beating in public forums. Here's a guy with a great track record, a great history of getting this stuff right. He happens to have got it wrong. And people are burying him. He didn't get dumb overnight, he got early overnight. And it's a problem, yes, I get it. But let's just be reasonable at this and understand we all get it wrong. He's just high profile wrong.
I think that was the other one that struck me. And I was the second in the Grant Williams series, which was Hugh Hendry.
Yeah.
So you were talking about Mark Cohodes being a bit broken by the whole process. I'd seen Hugh in Los Angeles a bit before you filmed him, and I saw him again in London, and I was like,
You said this to me.
I said I don't think he's gonna stick around.
Yeah.
And there he kind of revealed with a brutal honesty of how difficult this business is. People don't realise how difficult this business is.
Well, that piece with Hugh,
particularly if you're a contrarian.
Yes, exactly. Hugh was the next one after Mark, and it was a completely different feeling. But I mean, you're absolutely right. It was brutal honesty on Hugh's part, and
it was very downbeat, that interview.
It was. And look, Hugh. I mean, there are demons in Hugh that I thought came across. But he's such a wonderful guy. He's got an enormous heart. He's got a brain that's even bigger, and there's an openness to him that he's willing to show the vulnerabilities. He's willing to show. He he doesn't hold back. And when all the video clips that everyone's seen from YouTube in '08, when he was calling out Jeremy Sachs and calling out Jeremy Paxman and calling out Liam Halligan, all these guys, that's you. He doesn't mean anything by it. So this is honestly what I think. So, I knew he'd be honest in the interview. But I came away from that. It was the first time we met. We've had a correspondence for years. It was the first time we've actually got a chance to meet. And I came away from it. I hugged him when I left, and it was such a genuine. I was like, God, I just want you to be well and do well. And there's something about him that I gravitate towards, because he's a real human being. He really is, with flaws and successes and all of it. And he's not afraid. I was only happy to share it, but he's not afraid of sharing it. And I love him for that.
Yeah, and I just think, again, going back to the kind of late cycle, you see these, for contrarians particularly, these long cycles get really hard.
Oof, painful.
And you lose people along the way. We lost Julian Robertson in the late 90s. Yep. You always lose people ahead of it because people just go, I don't understand it anymore.
Well, Lee
which
Cooperman.
is usually a signal.
Lee Cooperman's the perfect chance. Lee Cooperman, right? The most recent one. He's had enough. He's like, you know what? I just want to manage my own money. I don't want the stress of reporting to clients because of this mismatch of expectations and time horizons. Our mutual friend Jim Pallotta, same thing. Just wanted to give money back to investors.
Have you managed to get Jim, by the way?
Jim, if you're watching this, we're coming for you. You've promised us
6 times.
I know, but it's the same thing. He said, look, unless you let me have it for 3 years, I can't do what you want to invest with me to do. So either give me the time to get it right and be wrong, or let's not bother doing this. And I think you're absolutely right. That's where we are.
Is that a function of also how the industry is now changed and doesn't allow that kind of natural volatility that's required for people to be early, to have a few shots at things and all of that stuff? Is that what's happening? Is somewhere, maybe it's the pension money that force people into...
Do you know, I've thought about this. I don't know what it is. I think it's it's the ETF phenomenon. It's short-termism, which is not just in market, it's everywhere. It's instant gratification. Everything is short-term. And I think in normal markets, to be right, you have to have a window. You have to have a period to be wrong. Right? And that was never a problem for people. You didn't really check your 401k every day. You didn't sweat someone missing a benchmark by 20 basis points over a month. But now that has become the norm, and it's not what have you done for me lately, it's what have you done for me today. And so it becomes very difficult to manage money under those circumstances. And that was one theme when talking to these guys throughout the year in this series. They're all having that same problem. The ones who are making money are having the same problem. It's not exclusively if you're
So
down.
where's this industry going? I'm not entirely convinced it's going to mean revert back to what we thought. I'm not sure that this industry is changing forever in whatever way, I don't know, but certainly the computer's not going away, machine learning's not going away. There's a lot of things aren't going away. Yes, there's going to be some huge problems as we've identified.
Yeah, I'll turn that back on you, because you are one of the deepest thinkers I know. I know how deeply you think about this stuff and how much time you take to really kick this around. And working with you these last few years, I watch you see something and immediately you're 3 or 4 steps down the line, but then you reflect on it and you start fleshing out that. I mean, it's fascinating to watch. So when you think about that, where do you think this industry's going?
I think it's going to shrink massively.
Yeah.
Because I think everybody in the shorter term time horizon, and for me, shorter term is everything from intraday trading through to kind of the 1 week to 1 month time horizon, has no edge left. It is luck if you win now.
Yeah, totally.
Because the computers, I wrote some pieces about this, and the computers now are so extraordinary that a website that amalgamates hotel rooms gets pinged up to 1 million times a day by people like Two Sigma and these funds, just to see what the price, they put in prices and dates, and they put it on the individual websites and the amalgamation websites and everything. They then look at the algorithms and see how it adjusts the price of the hotel room, so then they can estimate the occupancy of each hotel room.
Right.
So they do that 1 million times a day on thousands of websites. So what advantage do you have as a fund manager in Ohio working for the state pension fund, analysing the Hilton results, waiting for Morgan Stanley to send you zero? You have zero chance.
Well, time, that's your only advantage. If you're a pension fund, that's the only thing you've got, and it's being taken away from you.
That's right. So you've got this huge problem that the machine's now before anybody else in every respect. So all company announcements, all of this stuff is already in the price. So JP Morgan, for example, has real-time data on every bank account and every credit card that they have available. So they know in any city at any one time what spending patterns are like.
Yeah.
So that renders all economic data worthless. So I just think I can't see anything but that whole industry shrinking. The machines aren't doing a great job still yet, but I think that's partly coming. So I think that if there is any remnant left of the kind of hedge fund investment industry, I think it's going to be at the longer term time horizon, where machines don't have the edge, where things like value do have an ability to drive returns over an extended period of time.
But then you have this period, or this problem rather, that these machines corrupt value, right? Because value becomes much harder to kind of figure out. If you're investing over a longer time horizon, and I think you're right, that's where this should be. These guys should be looking to make.
Because that's where the most uncertainty is, and the human mind has an edge versus a machine. Because a machine is a bunch of probabilistic outcomes.
Yep.
It's impossible to compute, the outcome for something over an extended period.
But you have to have the luxury of letting the machines do what they're going to do between now and your long time horizon.
That's right.
That's really hard nowadays. It's really hard, and everyone had the same problem with that when I spoke to them.
Yeah, it's going to be really interesting as well to see. I mean, it looks like the cycle's finished now. It's going to be super interesting to see what happens with ETFs, because that was I know we did that. It was last year, I think.
Yeah, it was Steve
that whole ETF thing, and I know Mike Green's been on at this, and all of this stuff. That's yet to really play out. We've seen bits of it, with the volatility blow up in February. I think that's a theme that you've followed through for quite a long time now, and that's yet to play out, but it's coming.
Yeah.
The volatility theme has been playing out more so, but I think there's probably more to come on that. There's some of these kind of screwy parts of the financial system that I know, again, it's something that really appeals to your mind is looking at the anomalous state of the world and saying, this is not right.
But it is. It's all this wonky stuff. It's all the stuff that you don't read in the headlines. You read in the deep. You read in papers. You read from other finance guys. You read from analysts and economists. You don't read it in the news. And it is. I think you're absolutely right. This stuff is all starting to go a little bit pear-shaped and become potentially unstable. Some of it is clearly unstable. Some of it's becoming potentially unstable. And yesterday the Fed announcement yesterday, which I happened to turn CNBC on, and I heard as I was going to the kitchen to get a glass of water, the guy say, "We'll be back with the Fed announcement in 7 minutes and 15 seconds." And I'm just sitting there thinking, back in the day, it would hit the wire, Fed leaves rates unchanged. Now we have a countdown to the second for this data point. And how much more importance does that imbue in this thing, that you're basically saying to everybody, hey, everybody, quick, something important is going to happen in 7 minutes and 15 seconds. Gather round. And when you look at what happened yesterday, when they did what everyone kind of expected they would do, the market, the Dow was up 264 points. It went down 100, then back up 100, and then it ended up bleeding out during the day. There wasn't really any new news in what happened yesterday. Yeah, we start passing the minutes, which goes back to your machines again, looking at what the words are and trying to figure out what they mean, and the algo's triggering. But we're creating this incredibly complex spider's web for ourselves through doing all this, and we're making things more important, more dangerous, more volatile, simply by saying, right, we need to make something out of this. It's a Fed press conference. And I watched Jay Powell yesterday, and and in fact, you've brought me this. I brought my glasses because I'm an old man, but I actually want to read this quote. I wanted to get it right, because I wrote about this back in the early part of the year when he was given the job. And I want to get this quote right. This was from a 2012 FOMC meeting, when they released the minutes 5 years later, and he said, "I have concerns about more purchases," this is QE obviously. "As others have pointed out, the dealer community is now assuming close to a $4 trillion balance sheet, and purchases through the first quarter of 2014. I admit that's a much stronger reaction than I anticipated, and I'm uncomfortable with it for a couple of reasons. And then he went on to say, first, the question, why stop at 4 trillion? The market in most cases will cheer us for doing more. It will never be enough for the market. Our models will always tell us that we're helping the economy, and I will probably always feel that those benefits are overestimated. We will be able to tell ourselves that market function is not impaired and that inflationary expectations are under control. Now, when that came out, I read that and I just thought, you know, this guy's different. He gets it. And what he may or may not have gone forward to do in the months since then, what I took away from that is he understands this. So whatever he does, we're either going to know that this is all about keeping the wheels on, because he knows the damage they're doing, but he's got to do it anyway, or he's going to be his own man and do what he thinks is in the interest of the market. And I watched him yesterday in the press conference. He's assured, he's calm, he's everything you'd want in a Fed governor. And I tweeted, I just wrote, I like Joe Powell. There, I said it. I like the cut of his jib. There's nothing more. It's not a comment on his capacity for the job. There's something about him that I think he's the right guy at the right time. And I was astonished at the reaction to those 4 words. I mean, 350 likes or something at one point. This was yesterday. I haven't looked at it since then. But everybody going, just disgraceful that you like a Fed chair. And I'm thinking, wow, look at where we're at. I mean, this guy has basically got up, he's answered a series of questions. We all know the situation he's in. He can't scare the horses, so he's got to be as diplomatic as he can be. But everybody is so invested now in the Fed chair, and they've taken sides. The Fed are evil, the Fed are keeping the market together. And no one can look at this and say...
But to be fair, the reason you've probably got that comment is you've been generally of the Fed as evil side. You've got a lot of
absolutely right.
people...
Absolutely right. And I pass those out, but there are people saying, you know, it's effectively traitor. You've gone over to the dark side. And I'm not commenting on the Fed and what they're doing. I'm just saying this guy, he's in a terrible situation.
Yeah.
We all know there's too much debt. We all know rates have to go up so they can come down again. We all know that the economy cannot stand higher rates. So what's the guy to do? But suddenly, everyone is looking at this guy and they've taken a side, and if he doesn't do something really dovish to keep the market going, all the bulls are frothing at the mouth and saying he's killing the market, he's going to destroy the economy.
Including Trump.
Including Trump, yeah. But Trump was probably the final nail in the coffin that said he had to, I've got to raise now. If I don't raise now, our independence is out the window. So, you know, this poor guy, I mean, I called it a hospital pass when he took the job, and it absolutely is. Yeah. But we have this ability now to try and distill complex systems, ecosystems, down to a press release or a talking point or a...
But isn't that just a way of, in an incredibly complicated world, for people to digest it into the one thing?
Yeah, yes.
That's all they want now.
Yes. That's exactly.
Because things are so complicated, right?
Short-termism again.
I mean, if you actually go through and said, okay, Grant Williams, you're now the Fed chair, you'd break down into tears.
It's Jim Grant's line when someone said, what would you do if you're the Fed chair? And I hat tip to him, quit, day one. Because it's an impossible position.
Impossible. It's impossible. I mean, would you have done QE? Probably.
Yeah, the TARP, yes, I would have done.
Yeah.
Would I have kept it going for a decade?
And it was awful.
No.
I mean, but we don't even know what would have happened had we not done it.
Well, the counterfactual is always a problem. It's exactly right. The system would have gone down. What does that mean?
I don't, the problem is nobody knows. The stakes keep getting higher and we can't figure out what the outcomes are now.
But you know, let's. I'm going to flip this around now because we're talking about the Fed, we're talking about the hike yesterday. Let's talk about the dollar. Mm-hmm. Because you and I have been on the same side of this, we've been on opposing sides of this, and you've been bang on this last year. And this is perhaps the key to the whole thing at the moment. And we find ourselves on opposing sides of this argument. Now, you've been right, I've been wrong. I've said the dollar is not going to do what you and Brent Johnson and not Mark Yusko, I think he's in my camp, but I lose track. But you guys have been absolutely spot on with the dollar. So where are you with the dollar now with this latest hike?
So I'm flat, because I don't know. There's a phasing for me, and I think Brent would probably agree with me as well. For me, the most likely outcome is this phasing of, right, the Fed are still restricting monetary policy. You've got a world that's slowing down rapidly. You've got the oil price that's just collapsed. So that is less dollars in the system.
Yep.
The US has been a relative outperformer, so it's been sucking in dollars, so there's less dollars around. You could see it in the European banks. I mean, this is still looking ugly, right? So then the natural outcome of that is the dollar goes higher. But the end outcome is likely to be a dollar collapse.
Right.
It's that. Now, does it happen here and now? I don't think so, because maybe people look forward and say, Fed dovish, they were less dovish than people expected. Fed dovish, therefore Fed pause, therefore Fed cut, therefore QE, therefore the dollar collapses, right? I think that's too many dots everyone's joining.
Yeah.
It's kind of a bit like Luke Grommen and the tomorrow there's going to be a rebasing of all world currencies based on gold. You know,
Luke gets a fair rap. I'll defend Luke to the hilt. That's not what you said, but I know what you mean.
You know what I mean?
It's
I don't think many people actually disagree. It's the dots that you have to walk to get there, and the sequence of those and the time that it takes. And I think many of us, and I included and you included, often make the mistake of thinking, okay, I see where the end is. It's coming.
Right.
And therefore, I'm just going to think about the end.
Position myself for that.
And you forget the bloody dots that go down the way first. So that's what I think. So with the dollar, I don't know right now. It could be the top of it. I think it's more likely to be a correction because the market's over-positioned in it. I think it's a correction. People are going to try and price in this kind of more dovish Fed. I think the economic data is going to come out weaker. But out of that, I don't think anybody realizes the desperate need for dollars, which is Brent's core case as well, and the BIS's core case.
Yeah.
And I think at the end of it, if there'll be some majesty to it, it would be that the dollar brings down the whole thing.
Right. Well, yeah. I mean, that would
and that's and that's what I think, and that's what for the dollar to create dollar strength has been generally one of the key drivers of these big secular things, but also it would be the key driver of gold, right?
Yeah.
It would be the perfect thing is, the gold crowd are so anti-dollars, but if the dollar causes in its own strength, eventually gold to rise, which has always been my premise, I just think there's a majesty to that. Maybe I'm completely delusional, but that's how I think about it. I think the dollar strength, the kind of 1985 Plaza Accord style strength, is the weak point in the entire global system.
But because this is, I mean, that's the case that you and Brent make, and I've said on every time somebody shoved a microphone in my face, I said, look, I totally get this. I think these guys have a really plausible case. But do you think, because this is the thing I'm curious about, and I've asked Brent about this, do you think this massive short squeeze spike that you guys fear, basically, I mean, you're not waiting for it, you're fearing this could happen, is that still on the cards? And if it happens, does it have to be crushed quickly by swap lines and unlimited printing of dollars? How do you see that part of it playing? That's the bit I'm curious about.
I haven't got a fucking clue. In terms of the speed, all I do know is I've looked back at every single dollar bull market, so it's been in an up phase, and you go into recession or some economic slowdown, what you find is the dollar accelerates. And it's almost the reverse in a dollar bear market. So we're in this bull market phase, I mean, that's clear. So I think the probability is that you get this enormous squeeze. Because I think if these European banks start going under, I mean, I'm just looking at, Banco Sabadell in Spain, it's just hit €1.
Yeah.
So it looks like that's going to go. So what are the Spanish going to do? They're going to try and paper it over somehow, try not to bail people in. But behind it, BBVA and Santander, and there's one after the other. There's the Italians, and then there's the Germans, and then it's not stopping. So if that issue's out there, then there's always going to be a shortage of dollars. I just feel that it's not resolved. And what do the central banks do about it? My own view is that the world has changed entirely. And we've moved away from the rules-based global order system, which is a US-centric model that was basically adopted from the British-centric model. And Trump and the rise of China and the rise of Russia and the rise of the Middle East has actually gotten rid of that. And I think we're going to go into a multi-fragmented world. So I think we're going to end up with a multi-fragmented world and a currency world where those nations start trading with each other, whether they choose a different currency. I don't believe in the SDR thing. I don't think there's a globalized answer. I think it's a regional, fractional, tribal answer.
Which I think is where a lot of what Luke Grommen talks about comes in. These deals are already being put in place.
Yes, I mean, Luke is dead right. Yeah. Dead right, but I think Luke thinks he's going to open the door tomorrow and it'll all have happened. No, because these things take time and you need a crisis to force it. That's the thing, right?
That's the important thing.
Like QE was always going to come because the Japanese had been doing it already, but the crisis brought it and then it was used. And with this, it's nothing to do with printing of dollars that's going to bring the dollar down. It's going to be the dollar's too expensive and nobody can use it. So they're going to be forced to regionalize and change. And that's a world that none of us understand, right? None of us have lived in that world. So I don't even know what it means for asset prices, volatility, how we invest, how to build businesses, nothing. Because if you don't have trade agreements, you don't have a rule of law that's consistent across the globe, you don't have things like the United Nations and all of these things, not that it's bad that they go, I just don't know what the new system is.
Yeah.
Somebody will figure out a new system because the world has been like that in the past many times. I just don't know what it is.
I mean, this is the perfect segue to talk about this, my Cry Wolf presentation, which is about this stuff. This idea of a gold standard being some kind of solution. When you talk about a new system, what's this system we don't know? And I put this presentation together. It was a thought exercise. It really was nothing more, because whenever anyone mentions gold standard, 50% of the people go, "You're an idiot, it'll never happen." The other 50% say, "We need to bring that back tomorrow." And that's it. No one actually bothers either engaging in the conversation or thinking the whole thing through. So I thought, well, I'm going to give a spit. I'll throw the cat amongst the pigeons and throw this subject out there and try and talk about it. And the more I looked into it, it's really interesting, because the knock on it is, if they put a gold standard in place tomorrow, chaos. Correct. That's exactly what would happen. If all the debt would get wiped out, they get the wrong price, it's deflation, they get the right price, it's inflation. It's a chaos.
Yes, the ERM.
Exactly right, but it's chaos. And that's why people go, so it'll never happen because it'll be chaos. But to your point just now, which is what made me want to talk about this now, this idea of there having to be a crisis. And gold standards don't get arbitrarily imposed. They come out of a crisis and a need to stabilize and reset the system. Yeah. And the point I was making in the presentation was, look, there's three things you need for a gold standard to happen. You need political unrest, you need social unrest, and you need market unrest. And if you look around us, well, political unrest, we don't even need to explain that. It's everywhere, right? Social unrest, you and I have talked about boomers versus millennials, men versus women.
Everything from the beginning,
right,
we've talked
everywhere.
about that.
The only thing missing is market unrest. So if we do
economic unrest.
Economic unrest, yeah. I mean, the two, I guess, are going to be linked, because you can't really have one without the other. So my point with this was, look, you're thinking about it the wrong way. You don't start with a gold standard. You end up at a new gold standard of some sort if you get all these things in place.
My pushback on that is, for me, it's irrelevant, because gold is always there.
It might be.
It can always be your standard. It doesn't have to be the standard, because people go to it because, look, let's face it, regardless of who argues against gold, they all know that it has a perceived intrinsic value over a long period of time, and therefore, in a world of turmoil, it's an anchor, that you can anchor your wealth to or anything to. I think of it as, it's my own personal gold standard. Should I choose to invest in gold or flee the safety of gold? Well, it's always there.
Yes.
So does the system need it?
Well, I think that when it comes back into a system like it might
Isn't that a decentralized gold standard? Because we can always choose to?
Yeah, we can, but what you don't have, or what you do have at the middle, which is a problem, is this layer of paper gold sitting on top of it. These massive number of futures contracts outstanding. In some kind of gold standard, where it's at the root of the financial system, that layering will have to go away. That's not completely, but there's no way you can have 100 claims on every ounce of gold if it's so that's the stress point, I suspect, when it happens. And look, I don't know. Could it happen? Yes. Could it happen? No. None of us know. But
I don't think the gold bull case in any way rests on that.
No, I agree.
You know what I mean? It's not that.
Well, gold's a funny one, because it's the one call that I'm comfortable that I've been right on for 18 years. And it's gone up and it's gone down because my call was never about the price.
Well, but also in price terms, remember I've been producing that GMI chart against 27 world currencies, right?
Yeah.
All it's done is stable, it goes up, then it stabilizes, it's a big period of consolidation, then it goes, it's all it does. I mean, it completely works.
People fixate on the price of gold. It's all anyone wants to talk about, the gold price. And I just think, look, if you own it, as you just beautifully pointed out, if you want an escape raft, it sits there. And if it's $1,100 an ounce, $1,500 an ounce, $10,000 an ounce, or $900 an ounce, it doesn't matter, except within the relative construct to the point where you want to use it. And so the price just,
you need to look at it as the relative purchasing power versus other
Exactly.
things. Now, all of these move up and down. So it has a bad relative purchasing power versus stocks right now. And at some point in the future, it'll have extremely high relative purchasing power against stocks. All asset prices work that way because they're relative, and gold is just one of those anchors.
Well, it just happens to sit. You can value just about anything against gold.
Yeah.
And while you can make correlations between other things, they're a bit more spurious. But gold, yes, is it fair to value stocks against it? Yes. Bonds, yes. Real estate, yes. It's a useful tool to do that. But I don't want to get on this gold thing because you know what happens when we get onto that. And I don't want to hijack this conversation either. But we talked about the dollar, and you brought up the Spanish banks. And this, I know you won't do this, so I'm going to take a lap of honour on your behalf, because you've had a phenomenal year in the calls you've made this last year. And you know, the Spanish banks was something that you've been talking about longer than anyone I know. I mean, you brought them to my attention 3 or 4 years ago, and I've been watching them ever since. Oil, you called oil spot on, to your point, amongst everybody telling you what an idiot you were. You know, Europe, the European banks, tech, Bitcoin. I mean, you've knocked it out of the park this year. You have. I mean, it's
some markets are my market, and these, you know, because of my business cycle framework and stuff like that. When these things come, they all come at once.
Yeah.
And it's those turning points that are the most interesting. You're wrong for a while. So I was wrong for oil for quite a while, but the big magnitude of the move I knew was this way round.
Yeah.
You know, like I think the big move in bonds is for yields to collapse now.
What I want to ask you about, because, and I say, I'm glad this is a conversation, not an interview. I don't want to hijack, but your call on Bitcoin was early and wrong, and then spectacularly right. Your call on oil, similar. How do you maintain that discipline? How do you ignore the noise? And is it just the framework, and stick with it and trust it?
It's the framework and the chart.
Yeah.
And it's like, you know, that's why I've still got that view on the dollar, and I'm slightly less sure. It's the framework and the chart. And I do listen to other people, but after a while I actually filter them all out.
Yeah, I know you do.
Because you kind of know your risks, you know that you could be wrong, and you just say, okay, what is the probability in all of this? And like with the oil thing, you know, I had a go at shorting it, got it wrong, it rallied, and then I got it right. And because still the factors were so overwhelming that, and I'll put it back to you, this is the case with Tesla, right? And now there's something very weird going on in the Tesla share price. It's odd, and I don't quite know, and I'd love to hear your thoughts about this. But the Tesla thing is exactly the same example, right? You kind of know, forget whether it's a fraud or anything else. There's a whole bunch of other things with Tesla that the share price should not be as it is. If there's one thing for me alone, you know, like with Bitcoin, the one thing that came to me was like, if you can fork this thing, then everything I thought was true is not true.
It's forked, yeah.
Porsche are about to launch an EV that is going to be 10 times better than a Tesla, right? For me, that's game over.
Right. Well, and Jaguar and Mercedes and Audi, I mean, they're all
you know, when Porsche come in,
yeah.
Right, that's the aspirational of all the cars, that's the one, and you know Porsche engineering. So in which case, your unique value proposition is now gone. So you have to live and die by the quality of your cars, and they're not good enough.
Right.
So for me, I get that, but talk us through, because this has been hilarious for me to watch, because it has been a gang fight. So there's a whole bunch of you on Twitter who ganged up on anybody who had the opposite view on Tesla.
No,
then there was the bunch of them who were like trolling you guys to death. It's like being like a much larger version of the Luke Grommin, Brent Johnson fight. Right. And so I've been watching this, and it's sucked in everybody from Mark Cahodes to you name it. Everybody's
Chanos, I mean, they're all in there.
It's just.
But I actually do take exception to that. What's been fascinating, and I've spent a lot of time talking to, they call it the Tesla Q community because of the Q appendix.
I never even know what the Q is.
Well, it's for the NASDAQ. When it gets delisted, you get the Q on the end of the ticker. Once it's been delisted.
I never even understood the inside joke.
So basically, once you're out of business and you're delisted, you get the Q tickers. That's where that comes from. And I was fascinated by this because I've looked at that stock, and I've looked at the company, and I've looked at the CEO, and I've looked at the equity, I've looked at the debt, I've looked at the whole thing. And you're absolutely right. Something's not right, and it's the equity that isn't right. And this kind of started for me with our podcast, with the Adventures in Finance podcast, and we had Mark Spiegel on, who's just great company. He's a fascinating guy. He's funny. He's smart. He's out there. he's saying what he thinks, and people should embrace that, right? Instead of, because he's saying what he thinks and it disagrees with your view, hating on him. It's nuts. He's a piece of work, but he's great. And we had him on the podcast, and we spent an hour with him picking Tesla apart. And he knows what he's talking about, and he have all the data points. And at the end of that, we said, look, this Real Vision is not about one side. We want to encourage the other side. So open mic. Anybody that wants to put the other side to Mark, email me, and I'll talk to you. And if you can do it, we'll have you on. And we made that same announcement after the next 3 or 4 podcasts. And I had a bunch of emails come in, and I spoke to every single one of them. Some of them for a long time. I actually met a guy at San Francisco Airport. I sat for 2 hours and talked to him. A lovely guy, really nice guy, smart guy, massive Tesla fan. And every time I drilled down with these guys about their rebuttal, I ended up at the same place. Elon will figure it out. Trust Elon. He's the smartest guy in the world. And I said to all these guys, I said, look, I can't have you on the podcast for 2 reasons. One, you're going to get battered by people because your case isn't strong. It's not, you don't have the data sets that he has. You've got faith, which is wonderful. Yeah. And 2, I don't want to make it look like I'm stacking the deck by putting a weak bull case up against an articulate, strong bear case. It's not right. Eventually we found a guy who, I'll be honest, again, lovely guy, it was on the borderline, but I didn't want to go any longer without having a bull on. And since then, I've been fascinated by this, and I've spent a lot of time talking to that Tesla Q community, understanding their points, and the work they're doing is extraordinary. It's extraordinary. This is the kind of research that you would pay expert networks billions for.
I mean, this drone footage
It's amazing.
Of car parks and tents and
and
channel checks
and court cases and affidavits that are all being filed and brought under. There are hundreds of lawsuits being filed against Tesla right now, from everybody from individual owners that claim they've got a lemon car to municipalities and states for non-payment of bills and taxes. I mean, it's extraordinary. And what I find most fascinating about this, you look at the debt and the equity. I'll always trust the debt. I've been an equity guy all my life, but I know they're way smarter than I'll ever be. The debt's getting smashed and the equity keeps going up. Okay, fine, something's not right there. But the more you look at it and the more you try and dig into it, the more the scales fall from your eyes. And we had this, we're filming this 2 days after the Boring Company fiasco. There's no other word for it. When they unveiled this mile-long tunnel in Hawthorne, California, under the Boring. And it was so ludicrous that even the sort of pro-Tesla websites have written.
Ludicrous in what way?
It wasn't what it was promised, right? This high-tech skate where you'd lower down and you'd go through this tunnel at 150 miles an hour. It was basically a Tesla Model X with training wheels fitted on the side, driving at 49 miles an hour through a tunnel, and the footage from the inside of the car with the CBS reporter, they're all over the place. They're bouncing around, and that's interesting enough because when you watch the press coverage from even the pro-Tesla websites, one of them, Japonik or whatever it's called, the title of their article was either what was this shit or what the actual shit was this. It's farcical what's happening.
Well, considering we've been building tunnels for a couple of hundred years now,
yeah,
right? So we kind of know how to get cars from England to France under a thing.
1800 and something,
or the
Central
tube,
Line. Right. I just think it's a tunnel. But what's interesting is once that happens, is to watch this Tesla Q crowd pick it apart. And you have automotive engineers, you have thermodynamic physicists, you have all these guys saying, right, here's a tunnel, here's the drag coefficient of a car going through at 150 miles an hour, it has to displace the air, blah, blah, blah. You can pick any part of this, go into that community, and there is someone there who spent their life in that little corner of the global economy and what they all have in common is at some point, Elon Musk has said something or promised something that made them go, oh, hell no. Right? That's the factor that's brought them all together. No, you're lying. That's not possible. And so I find it fascinating. But what's happened recently, and I mentioned this at the top, this doxing. When Elon Musk called the boss of a guy called Montana Skeptic and basically threatened him to stop this guy tweeting about him. It's a free world. You're allowed to say these negative things about the company. If you're wrong, we know every single company in the world that has not been a fraud that's been called one has busted every short seller that's tried to do it. You just keep on executing, and eventually the short sellers get stopped out and they go away. And now there's people, and I've seen guys have faxed me death threats they're getting. You know, one guy had a faxed death threat to him, which said, "Do you want to go first or does your family?" Now, that's heinous as it is, but this person is claiming to be anonymous, the hacking group. And someone had put this guy's contact details and said, "Here is such and such's contact details if you want to harass him, Tesla community," which is ridiculous. But once his contact details went up, someone faxed him saying they were anonymous, the hacking group. And I just said to him, "Isn't it great that these guys are purporting to be the most sophisticated hackers in the world? Not only did they wait for someone else to put your fax number up there, they then sent you a fax." I mean, it's just, but it's symptomatic of a much broader, more toxic problem. And this, to me, I think, the reason I'm so fascinated with Tesla is when we talked about what happens when tides change and when cycles turn. This company, reliant as it has been upon subsidies and reliant as it has been on believers who buy into a dream, which I'm all for. I love the idea of having a dream. But the people who are going to get hurt are the people, and you see them on Twitter all the time, "Love you, Elon, I'm going to buy one more share of Tesla." These guys are going to get crushed because someone has an ego that drives them to do these things.
Do you think it's a total fraud?
I do. Yeah. I do. I think it's a total and utter fraud.
I think so too.
I don't think it started off as one.
No, of course not. None of them ever do.
None of them ever do.
And I think there's cross-financing. I think there's all sorts of stuff going on.
The Boring Company staff, the staff from SpaceX working on the Boring Company, this backfilling, we're going to give you 6% of the equity. There are so many red flags.
I think he's fought to keep his business in business.
Yep.
And just compounded bad decisions.
Well, and I think he has this habit of wanting to change the world and making these incredible pronouncements about, "Oh yeah, I'm going to build this tunnel." Right, okay, now we've got to make it done. And I can't be seen to back down and be shown to be wrong. So you people over there, go make that tunnel happen. And it's dangerous and it's sad and it's going to cost a lot of honest people a lot of money.
There's another parallel story that I've written about, and the guy on Twitter called Bitfinex.
Yes, now tell me, because I haven't been able to follow it.
I don't really even understand it myself, but there's this thing called a stable coin.
Yeah.
So a stable coin was an ability for me to sell Bitcoins to you, and you're in Korea and I'm in Germany or whatever, and as opposed to having to go through fiat currency, you go through a stable coin, which is pegged to a fiat currency.
Okay.
But then in this decentralized network, you've got these centralized stable coins that are valued at $1. But there's this whole beautiful story of shenanigans, of weird entities set up and these odd banks and death threats and the whole whale Bitcoin community and price manipulation. And it's like the Tesla story in that, again, abuse of a bunch of believers.
Yeah.
And somewhere in the middle of this is this rotting core of people.
Right.
And I can't put my finger on it. And the guy, Bitfinex, who's anonymous on Twitter, has had plenty of death threats.
I've seen his stuff, yeah. I just don't have the bandwidth to follow it like I feel I need to, so.
Yeah, and it's just an extraordinary thing of, even when they asked to provide some sort of bank statement to show that these guys had $1 versus the number of these, the wording of the whole thing was odd, and just everything about it is odd. And the fact that everybody between this, Bitfinex, which is the exchange, and a bunch of other people related are all kind of ex-crooks. They're all kind of tied into each other's pies. It's a complicated mess, and I think that's another one of these things.
Isn't this interesting? Because at this point in the cycle, when you've been doing this for a long time, like you and I have, and lots of other people have been out there doing this for 3-4 decades, you can just smell these things. They just don't smell right. And I'm always fascinated that I've never in my life thought Apple was a Ponzi scheme or a fraud.
No.
Or Netflix. I think it's overvalued, but that's not the same thing.
No.
But when the evidence starts piling up like this, I'm amazed that people can look the other way and not just go...
So here's another one who's not a fraud, but is starting to become an interesting story, is WeWorks.
I wrote about that too, yeah. Yes, I agree.
Yeah, I actually, Real Vision was in a WeWorks space in New York. I get WeWorks. I get that there's a value in the community of WeWorks, because if they start actually using that community to do a number of things, it's a really interesting thing. But the shenanigans that's now going on with SoftBank, that's another one that I can't get my head around.
Yeah.
I just don't get what they're doing. I just don't understand.
But what do Tesla, SoftBank, and WeWork all have in common? Massively high-profile, charismatic leaders.
Yeah.
You know, Adam Neumann, I'm not sure how you pronounce it, at WeWork. I mean, it's extraordinary. You know, what was the thing he came up with? Community-derived EBITDA. And they managed to get a convertible away on a valuation of this. We're not going to use traditional EBITDA. Community, I can't remember the exact term now. But these charismatic leaders who, in times like we've been in, are always really easy to gravitate towards and always get a platform and people just follow them. And you're right, the SoftBank thing's worried me for a long time.
I don't understand. So the deal is, right, so you're a startup in whatever space and you're trying to raise $10 million of capital. SoftBank come and go, we'll give you 100.
Right, exactly.
Why?
Because they've got it, apparently, to go.
Yeah, well, clearly they've got the money, but why are these ridiculous outsized bets where they're pushing valuations up 4 times what they should be? What is that?
Well, when you have a portfolio of those things, if you can float, or if you can throw 100 million at one buyer and get a $25 billion valuation uptick in your portfolio, it makes all the sense in the world.
You've seen what they're doing with WeWorks.
Yeah.
I just saw it yesterday, I'm only just trying to figure it out. So they've just put this massive valuation on it.
Huge.
And then they're going to do something else where they're halving the valuation in a way of, did you not see
No,
this?
I didn't see that.
It was like this morning, I just saw it kind of bleary-eyed this morning. I'm like, I don't understand what's going on here now.
But isn't it, that's all you kind of need.
Yeah.
Because look, finance, it's all variations on a theme. We know basic finance is actually pretty simple. When you see something, you just go, hang on a minute, wait, what? That doesn't make any sense. Normally speaking, it kind of doesn't. If someone can't explain it to you in 5 minutes as to why they're doing that.
There are some times when you don't understand, like, I would not have understood the value of Facebook when it first started.
No.
There's a bunch of things that you don't understand because they're a change, and there's other things that you don't understand because they're so opaque.
Yep.
That it's almost meant purposefully
but
for you not to understand.
The idea of month-to-month leasing contracts at the top of a real estate cycle, you don't need to get cute. You don't need to figure out that if you're going to go and lease a building for 10 years and let everyone in there pay you month to month, when the cycle turns, you're dead. There is no, oh yeah, we can figure this out, we'll tie them into longer contracts. No. You're getting out your other contracts? No, you're dead. So that's just a timing thing to me. That's just, if you're going to get an egregious valuation in WeWork, get it 10 years ago when you've got QE.
Yeah, it's a great concept.
Great
right?
concept. But now, I don't see any way that isn't one of the first and most high-profile casualties of all this when it starts to come
now
up.
it's basically almost in private hands. Well, it is in private hands, but it's basically SoftBank now.
Yeah. Well,
because maybe SoftBank, just to play the Machiavellian card, maybe they know this. So the worst thing that could happen to SoftBank is for WeWork to go under.
Well, and the best thing to do is just not have anyone else.
It's not allowed to go under.
Right, exactly right. Well, let's talk about private businesses, because this is something you and I have spoken about so often in terms of, well, I mean, we did it. We went out and set one up because that's an escape from all this short-termism, all the volatility. You just find a business, and this was what Tony Deaton talked about in that interview, which everywhere I go in the world, people want to stop and talk to me about that conversation. And yet what Tony spoke of was very simple. It's find a business that has pride in doing something well, looking after its customer base, and understands the value of capital. I mean, these are 17th century principles that just happen to have gone out of fashion with this fixation on the stock market. And I mean, you wrote about this 2-3 years ago, this idea that stop thinking that the world begins and ends with listed securities. Invest in a business, build a business, do something real. And it is a way to escape that problem. Yes, you're going to suffer economic downturns, but day to day, your wealth isn't going to be fluctuating up and down. You're not going to be focused on the share price.
So this leads me in. So there's a lovely story that we've all been wrong on for a very long time that we know is a matter of time, which is Australia.
Yeah.
Right, so this is a real thing, right?
Yeah.
There is a classic, old school, hubris-driven bubble in private consumption, debt, housing, because they failed to get a recession.
Yeah.
Right? It's the warning signs of what happens if you don't let economies recover. Now, this time it wasn't their economic policies that did it. They allowed their currency to collapse, and China stimulated massively, and it saved them. Saved them is probably the wrong term, because what it did, it basically didn't give them a recession. So everybody in Australia thinks it's invincible.
Yep. And let's face it, Aussies, I'm a proud owner of an Aussie passport, but they don't mind sticking it to people when they think they've got the upper hand, that's for sure.
Yeah.
And they've been very vocal about it. But our mutual friend, Gerald Minix, has been sat down there warning about this for some time.
But we all have, right?
No, sure, but people don't want to hear it. And from an Aussie, they don't want to hear it. And I've lived in Australia, it's a fantastic country, but they don't want it, particularly this housing market. And this is, people who haven't spent time in Australia don't understand how crucial the housing market is. Everybody's wealth in Australia is tied up in their house. And my conversation with Bill Strong back in, I guess, May or June, we talked about this. That's his short trade that he's putting on. And what's interesting about Australia is you have a catalyst. There's a clear short opportunity. And the catalyst has been this Royal Commission into the banking and finance industry, which was put forward almost like the Brexit vote, like, oh yeah, we'll give the people what they want, it'll be fine, don't worry. They've set this commission up, and what the commission has been finding out, shock horror, is that Australian banks were doing everything all the other banks were doing, except worse, because they have gone 25 years without recession. Their hubris is remarkable. And when you look at what's coming out of this Royal Commission, and you look at the lending stats, you look at I was reading a stat the other day from my friend Michael Schneider, who's setting up a fund to do this trade. And Michael's a really smart bond guy. He's not a fly-by-night. I mean, this guy is as good as they come, and he's just all over this, salivating about it. And the stat he sent me, I've forgotten the exact numbers, but something like a year ago, 75% of mortgage applications were being approved. In the wake of this finance, it's down to 7%. I had to read that twice. I'm like, hang on a second. This commission is basically shutting off the bank's access to capital. It's punishing them for their misdeeds. And that is rippling through the Australian economy so fast now, it's making people's heads spin. And so when you have a situation where auction clearance rates have fallen from 75, 80, 85% into the 30s and 40s, that housing market has stopped. Already, the Aussie regulator is talking about, I read it yesterday morning, the Aussie regulator is talking already about reducing the caps on term loans because they understand that housing market is the entire economy.
So you're the Central Bank of Australia, you're the RBA.
Can I quit?
Yeah. What the hell do you do?
Well, exactly right.
What do you do?
Well, you've got two choices.
You either need to somehow hold property prices and not let them go up any further.
Yep.
Or you have to have a managed descent.
Well, which we all know is impossible. You can't have a managed property market descent. It just doesn't happen because there's so much emotion in that asset. And in Australia, it's worse because the leverage is so high. So people are levered to the gills.
So you're not answering my question. What are you going to do?
What would I do?
Gun to your head. What do you do to sort that mess out?
Look, I don't think it can be sorted out. It will have to play out, and you're going to have to try and cushion the downside. You can't stop prices going up, right? You can't cap them because as soon as they stop going up, that's the signal to all the people that have bought them because they keep going up. Okay, that's the end of the housing bubble. I need to get out. So you can't stop them going up. You can try and manage the descent. In 2008, when the financial crisis hit, the first thing the Aussies did was a $6,000 home grant for first-time buyers. And if you look at the chart of Aussie housing, it went up, it did that, and then it went up again. And that was the home buyers grant. So they knew then that this was ground zero. We have to protect this housing market because it's so important to the Australian economy. Now, valuations are of a magnitude far, far higher than they were back then. So to try and manage this descent is essentially impossible. So what you're going to have in Australia is a deflation of that housing bubble. And when it comes, it's not going to be pretty.
So is the easy trade not to just buy Aussie bonds because they're going to go to zero or negative? You know, is that not just the easiest thing in the world?
The currency and the bonds are the two straightforward trades, no doubt. Bank CDS, I mean, the beauty of Australia, the beauty and the pain of Australia is there's four big banks, essentially. Yeah. NAB, Westpac, CBA and ANZ. CDS on those banks is a good trade, but obviously you're late, you've missed that, right?
And also the equity's hard because of the superannuation funds.
The equity's hard, the dividends are so high.
And
they're franked, yeah.
Yeah, and the superannuation funds basically still invest in Australia. There's so much bloody money in that, they just keep buying their own equity.
Correct. But back in 2008, they all got smashed.
Yeah.
CBA, NAB, Westpac, they all got smashed in 2008. So they can and they will go down. Perversely, they may be one of the last things to go down because people will own them for the dividends. What you've got to watch for in Australia is if they start cutting the dividends, which, based on some of the fines they're going to have to pay, some of the stuff coming out of this commission, a dividend cut is, I would say, more likely than possible. If one of those big four cuts their dividends, Katie, bar the doors. That's the end of that story, and those things will get cut because people will have to cut them. So that story in Australia, I think, is going to be one of the biggest stories next year. A lot of people are focusing on Canada because it's kind of bigger and it's next to the US, and the Chinese money is a lot more obvious in Vancouver and Toronto. But Sydney, while the overseas, particularly the Chinese buying, have driven a lot of the froth in that bubble, it's not just that. It's ordinary Australians who've owned 5 condos on the Gold Coast, which they've managed to buy and lever up and go. It's a classic housing bubble. It's unraveling right now, and it's going into next year. It's probably the highest thing on my radar.
So it's fascinating, this conversation, just to wrap up, is that you've done a lot of learning this year from a load of really interesting people. And what's come out of our conversation is framing some of these things that we're both looking at and you're particularly looking at. There's like things that aren't right. Because you speak to you're speaking to short sellers, value investors, and a bunch of other people, some very smart people, and you come up with a set of things that aren't right. Tesla, we've talked about WeWork, we've talked about Australia, there's a number of these really interesting, the ongoing discussion about what's not right with the monetary system and where gold plays and the dollar and all of this stuff. I kind of feel like 2019 is going to clear up a lot of these things.
I think you're absolutely right.
Unless something stops this cycle, which is stopped in 2016 from the Chinese stimulating. The US manufacturing economy was basically in recession at that point, so was most of the world. Unless something miraculous happens to save the day, you're going to have a year where Grant Williams goes, I'll be going to you next year saying, well, Grant, you talked about this, and this, and this, and they all happened.
Well, we'll see. I don't know about that. But that's exactly right, though. I mean, this next year, you're the probabilities guy. That's the thing that I love about your framework, is it's all probability. You take all of it out and you go, well, look, am I more likely to be right or wrong here? And for the first time in a long time, I think, you can look ahead into 2019 and say the probabilities are stacked up, as you said. Something's got to happen to stop this occurring.
Yes.
Which is a huge sea change for people's expectations and mindset. And I think going into next year, that needs to be everybody's framework. It's like, okay, trouble's coming. Can it be avoided? If so, how? But I need to be prepared for bad outcomes in 19 as my base case, rather than
because that's the opposite bull market mentality, which is everything's okay. I need to be watching out for a tail risk event that may derail this. This is everything is bad. I need to look for the tail risk event that may turn that around.
Exactly right. And that's a hard switch for people to make. Really hard switch.
Well, it's going to be interesting, and it's been fun to talk about all of this stuff and finally catch up, because I see you on Twitter, I see you here and there, read bits of your stuff and figuring out what you're piecing together in the world, because you're basically on this journey. I'm on a different journey, all seeing it and just figuring out. It's just really interesting to see where we both are now, and I just think 2019 is going to be a hell of a year.
Well, at least we've finished on something we completely agree on. It's going to be a barn burner.